Pleasant good night, everyone. Sorry for the inconvenience. My PC decided to give me some trouble in the 99th hour. Um, Miranda, is it possible that you can unmute yourself if you're hearing me?
Yeah, bro, I'm hearing you, but I'm hearing you really low.
You hear me really low. Is
Yeah.
that better?
Not so much now.
All right, hold on one sec. Hear me better now?
No, actually, I hear your father now.
Um, is this good?
Yeah, that's a little much better.
All right, good. Pleasant good night, everyone. Again, um, do apologize for the timings. I just had a little problem there with my PC in the last 12 minutes. All right, don't want to be too long on the call. All right, I know it's Friday night, and even though it's 8 o'clock, it's still early. Somebody might want to go and have some fun. So try to keep it as short as possible, and give as much value as I can tonight. Okay, so last session, I believe it was Saturday night, I shared with most of you, I believe, on the call, um, a strategy that I use to stay in trades for longer periods of time. All right, and it uses a combination of candlesticks called Heikin Ashi, and I combine it, right, using moving averages and the relative strength index. Now, I saw this doing while doing some research on different strategies, right? And I just added a little tweak here and there to adjust it so I could be more comfortable with my entries and my exit points, right? And in general, something that I could use and something that could be duplicable, right? Where others could do the exact same thing and make money, right? So, for those who are new, right, just going to run over really quick what the Heikin Ashi is, which is actually what you're looking at on your screen. Now I'm going to switch it back over to the Japanese candlestick, what everyone is normally accustomed to. All right, I'm going to hide those stuff, get rid of this, hide this. All right, great, great. All right, let me get, let's do USD card. Okay, cool. So what we have before us right now on the screen, hope everyone is seeing my screen, by the way, all right? Um, is actually the normal Japanese candlestick, right? And it's on the 4 hour time frame, and its currency pair is USD CAD. Now, with the normal Japanese candlestick, from the beginning, when I had now originally started, trading for my first 2 months in trading forex. It was kind of pretty difficult for me, right? At times differentiating whether it's a uptrend or a downtrend in market, and how much the market may move to the upside, to the downside. Then I had to go back over into my basic and learn everything again because I didn't too fully understand my, my role and function as a trader. Right now, most of the people on the call want would have gone through basic 1 to 4, right? And you would know, right? I'm gonna go back on my notes. All right, go back on my notes. You would know your role and function as a trader, right? We are the 20% in the forex market, any financial market, the 20 percenters, right? Sir John Mark Leon's always stress on that, and I always took note of that. And it's because we can't predict where the market moves, right? That is not our job. We are not the Bill Gates. We are not the Warren Buffett and those guys with all the money, right? We do not move the market. What we could do, right, is locate trends, follow those trends, right, and try our best to make as much profit from the trending markets, right? So to me, my role is to identify the trends. If I want to be profitable trading, identify trending markets, right, and follow those type of market, right? Actually try to understand how it moves, how it reacts to certain areas and levels in the market. So you would have gone through your basics, support and resistance, pullback, trend lines, all those fancy stuff, right? So what I'm going to show you is something a bit different. As I said, I through my times struggles and searching and learning new stuff, I stumble upon the Heikin Ashi candlestick, right? Now, to get the Heikin Ashi candlestick, you may not get it on your MetaTrader 4, but you can get it on your tradingview.com, right? So, what you do, you go to this top column here, right? And you're going to see these two candlesticks here. It's going to say candles, and there's going to be a drop down to the right hand side of that that says bars style. You want to select that drop down, and you want to select Heikin Ashi. All right. When you select Heikin Ashi, your chart supposed to look like this. Okay. Once you do that now, your chart is now in the Heikin Ashi candlestick. Right. So the entire, if you go to any one of the time frame, whether it be hour, 4 hour, daily, everything is going to be in Heikin Ashi. So what I do for the in terms of the strategy, you utilize any Heikin Ashi. I use the 4 hour time frame and the daily time frame. Right. So if you really look at the Heikin Ashi compared to the Japanese candlestick, I don't want to stay too long on it. You guys could probably do some research on your own time, but I want to really get down into the strategy itself because that is the real value, right? That's the real value. Right? You guys could do a little research and thing afterwards. But just something quick. Um, with the Heikin Ashi, you can
The bossy God's one.
no no bossy God. Right. So with the Heikin Ashi, you realize that you could see a lot of it's clear to see the volatility in the market or the momentum the market is moving in, right? So where in the Japanese candlestick it looks more broken up, with the Heikin Ashi, the chart actually look more smoother, right? It looks more smoother. So you still have
Bro,
yeah.
could you mute the other person because we're hearing them louder than you?
Okay. All right. Cool. Better. Great. All right. So with the Haikanashi, you could still identify your areas of consolidation, um, higher highs, higher lows, lower highs, lower lows. The only thing really changes is the candlesticks, right? Could still identify the trend, but it looks more smoother than the Japanese candlestick. So let's say, for instance, you're looking at this portion here of the chart, right? This portion over here to the right hand side. If you switch over to the Japanese candlestick, look at how this looks compared to how it looked before. Everything more broken up. Um, you're not sure really. You can still study your candlestick patterns and all those nice stuff, right? But what I'm saying is, you're seeing that brokenness, right? So a new person, if they saw that, they might be thinking, well, wait, boy, the market going to turn around. I'm going to move my stop loss there, or I might want to come out of the trade, right? I'm just saying, some people could think like that, right? I used to think like that when I just started. I being real, right? I being real. I might have want to jump out the trade or move my stop loss close. So even if the market turn around, I still get a little extra, right? Compared to if you have the Heikin Ashi candlestick. Watch how this looks compared to before. Everything is much more smoother, right? So as I said, I don't want to stay too long on the Heikin Ashi candlestick. You guys could do your research afterwards. What I like to combine the Heikin Ashi candlestick with is three moving averages: a 50 period, a 9 period, a 50 period, a 9 period, and the third period. Oh, that person came back up. Right? 50, 9, and 3. Right? So the chart is going to look something like this. Right? With the three moving averages up and the Heikin Ashi chart supposed to look something like this. Now, my 50 is going to be the black, my 9 is going to be the blue, and my 3 is going to be the yellow. Right? You can see the yellow is being hidden because it's actually a closer moving average compared to the 50 and the 9. I ain't going too detailed into moving averages. You guys could do your research on that, right? I'm getting down to the strategy, entry so you guys could utilize this and practice it, demo it, and see if it works for you. Not everything might, not what could work for me might not work for you. You know, everybody have a different feel. Everybody have a different trading style. Some is scalp, swing, whatever. Right? Just sharing something that I bounced upon that works for me. So we have the moving averages up. Heikin Ashi candlestick is up. Last thing we want to add is the RSI. All right. So the settings for the RSI, right? To do the settings, you need to come when you go into indicators up to the top bar here, you'll see indicators and strategies. Select indicators and strategies. You could go to the search box or scroll down RSI. Right? You're going to see relative strength index. You want to select that. It's going to come up here below your screen. And what you want to do, you want to go into format. You're going to see show and hide, and next to show and hide, there's going to be a word name format. You select format, and now you can customize your RSI. So what I do, I change my length to 9. Right? My style, I change 20 to 40, and I change 80 to 60, and I select OK. Now I look at my RSI different, right? As I said in the last session, some may agree, some may not agree. But this is what I saw works, right? And how I see it complements the moving averages and the Heikin Ashi. Now we were taught in the IML Academy that anything below 30 is considered as the oversold, and everything above 70 is considered as overbought. I do not look at the RSI. I do not look at the RSI at like that. I do the opposite. I said everything below 30, everything below 30 is going to be overbought, and everything above 70 is going to be oversold. Right? So that is something key. Very, very important with the RSI. Everything below 30 is going to be overbought, and everything above 70 is going to be oversold. That is how I look at the RSI. As I said before, you may not agree, but this is what I saw um, with the RSI complementing the moving averages and the Heikin Ashi candlestick. So the last thing I want to add is a 50 horizontal line on the RSI. So I go to my horizontal tool, place a line here, and I select the settings and move it to 50. Right. And it did not change. Okay, great. Cool. That's it for the setting up of the chart. Now it's time to show you guys how this strategy works. I had some people from the last session called me this week and they say, Kelvin, I had to buy something to drink. Because it was money morning for them, right? Glad to know that it worked for you guys. So let me just get rid of this here. All right. So guys, looking at the chart, right? Basic. We have a high point to the top here. We have a high level to the top here, an area of resistance, right? We have an area of resistance here, which is also a high. And we have an area of support, which is a low, right? So we have a high, we have a low. What we are doing is trying to identify the trend, right? So we have a high, we have a low. We have a lower high, right? Another area of resistance, right? And we also have a lower low, right? A lower high. As we go lower, there's a lower low. So based on that, what we are seeing is a downtrending market. All right, cool. All right, cool. Yeah, there are three things I look for before I press enter in a cell. Just three, right? You get everything on the list, on the confirmation list. You're free to press enter. Watch this. Watch magic. Watch magic here. So in a downtrending market, if the market is going for a sell, I'm looking for a red candlestick. And what I want to see from that red candlestick is that red candlestick must cross this 50 period moving average, which is the black line. Right. The red candlestick must cross that 50 period moving average, which is the black line, and it must close below it also. Right? That's the first confirmation I'm looking for. The red candlestick, Heikin Ashi candlestick, must cross this 50 period moving average and close below it. Hope you guys hear me better now. Right. So, as I was saying, right, the red candlestick again must cross the 50 period moving average, right, which is the black line that I have here, and close below it. The second thing I want to look for is if it starts to cross either the third period moving average, which is the yellow line on my chart, or the blue line. And majority of the time, I'm telling you from what I see majority of the time, it normally crosses the third moving average, which is the yellow line that you're seeing there. Majority of the time. The last line that it normally cross is the nine period, which is the blue. So that's the second thing I look for. So the first thing, my red candlestick, Heikin Ashi candlestick, crosses the 50 period and closes below it. The second, the 50 period crosses the third period moving average, or both. The last thing on the confirmation list has to deal with the RSI, the relative strength index. Now remember what I said in the beginning, which relates to the relative strength index. I look at it different, the opposite. So anything below my 40 line is going to be considered as overbought. Anything above my 60 line is going to be considered as oversold. We all know once price reach a oversold position or area, we should get ready for a buying opportunity. And once price reaches in an overbought position, we should get ready for selling opportunity. So watch this. I take my horizontal line, I lined it up with that Heikin Ashi candlestick that crosses and closes below that 50 period line, and align it up with my RSI. Watch this. Look at where the RSI fell. It fell below my 40 line, which I consider as being overbought. Right? That's right here where I put that X. That is where it crossed. I would wait. I would monitor this candlestick last 10 to 12 minutes of this candlestick, and then I will do market execution most of the time, or depending on if there's a wick, I would put a buy stop below the wick of that candlestick. But what I want to make sure is that the candlestick does close below this 50 period line. Right? Below. Must close below. If it doesn't, you could end up in some problems. That's why it must close below. So let's say, for example, we did all of that, and let's say we enter the market here. Now we want to be able to stay in trades for like longer periods, right? To do that is going to require you to have patience and allow the market to do what the market have to do. Right? I will touch on my take on the stop loss in terms of risk management and those stuff. So let's say we enter this blue line here, right? Let's pull a measuring tape. Use the measuring tool here. From the entry to where the market went down. This is USD CAD.
It's only real far.
Still strong and far. Is it better, sir?
You better know.
Great, great. Excellent. So I was saying, if you use the measuring tool and pull from the entry to this low here. That's 177 pips. 177 pips over a period of 1, 2, 3, 4, 5, 6, 7, 8. Well, 7 trading days. Over a period of 7 trading days. From just one entry, right? Getting that perfect entry, the 3 confirmations down, market execution or buy stop, and you just press enter once, and you don't have to look at your phone for a whole 7 days, an entire 7 days. You could monitor it if you want, right? But you wanna be patient. I might check it like every 8 hours, or every other day, or every day, right? I won't check it every hour. I won't check it every half an hour, because I'm going to allow the market to do what it has to do. Give the market the room, right? And trust the process. So over a 7 day period, you hold this trade and you make 176 or 177 pips. Okay, cool. So where do I put my stop loss, Kelvin? Okay. This is what I do when it comes to I know somebody might have a question based on if I put take profit, or where do I put my stop loss. So here's what I do. Here's my theory when it comes to putting a stop loss. Right? We learn proper risk management, right? And one of the key things is when it comes to proper risk management is knowing how much you are willing to risk per trade, right? And knowing your account size, if your account could handle it. So let's say I'm gauging here. I'm gauging, let's say, an entry for here, right? An entry over here. And we're looking at a 30 pip or 20 pip stop loss. Okay. A 20 pip on this trade, you could get away with it depending on your entry. You could. But then you have to look at that this candlestick, this candlestick here. This one is going to kick you out your trade if you have a 20 pip stop loss. If you have a 20 pip stop loss, this boy here, this Heikin Ashi candlestick here, is going to kick you out your trade. Let's say if you had a 30 pip. 30 pip, you could still get kicked out your trade. So here's what I do. I play the safe game because I know my account can handle it. I'm gonna put my stop loss to the last area of resistance. Welcome, Natalie. Right? I'm gonna put my stop loss to the last area of resistance. To me, this is a safe spot, and this is a sure indication to me that the market doesn't want to go down. Right? And because right? And because yeah, yeah. And because I know my account can handle this stop loss. 124 pips. 124 pips stop loss versus Oh, let me get the right entry here. 124 versus right 171. Right? Not too bad. Right? Not too bad. Right? If we're just looking for like this area right here. Cool. So here's the trick. Here's the trick I learned. So I would do a twin trade on this. Majority of the trades I do, twin trade. So if it's at um a dollar a pip, I would do a lot size. I would do a micro lot size of 50 cents a pip, 250 cents a pip on this trade. So 20 to 30 pips in profit. Right? I close off one trade. And what I do, I move my stop loss 2 to 5 pips below my entry in a sell. Right? 2 to 5 pips below my entry. So if the market does decide to reverse, it's gonna hit my 2 pip or my 5 pip stop profit, as Christopher Derrick does say, right? My stop profit, and I get exit out the trade. Most people might be vexed, but at the end of the day, you just collect 20 to 30 pips in profit on one trade, and you safeguard yourself in terms of your risk. You're still exiting the trade with 2 to 5 pips in profit. Don't be vexed. Trust me. Don't don't be disappointed if you make 20 cents, 30 cents, 40 cents, 50 cents profit. Trust me, it adds up. It adds up. Over a period of time, trust me, you lose 10 trades for the day, right? At 10 cents a pip, right? Well, sorry, you lose 10, not 10 trades. Let's say you lose 5 trades. Well, you don't really lose, eh? The trade actually pull back and it hit your stop profit at a 2 pip stop profit, right? 2 pip stop profit, 5 trades. That you're still gonna make 10 pips in profit when you do the maths. 10 pips in profit. So it does adds up. Don't ever take that for kicks. So when I do that now, as the market continues to go down, I would leave the market, right? Leave it like every day or every other day. I'll continue to watch the market. And what I do is a trailing stop loss. As the market continues to go down and I go into profit, I safeguard some some of my profit. Right? I play the safe game. And you trail your stop loss. You trail your stop loss. You can do your trail stop loss to how you like, whether it be on every pullback you want to move your stop loss, pull back there, you move your stop loss there, pull back here, you want to move your stop loss a little way above here. It's up to you, right? Where you feel comfortable. But understand that it's a process, right? It's going to require you to be patient. For sure, going to require you to be patient, right? And trust in the process. As I say, not everyone is going to like to do it or agree with the strategy, but it's just something that I do from time to time, and it works for me, and I make it work for me. Okay. Now you can, once you're comfortable, if you're comfortable with is stop loss being here, right? Like me. If you're comfortable with the stop loss here, you can leave this trade. Leave it. Once you're very comfortable with your stop loss being where it is, and let me show you the potential gain from just that one entry there. All right, look at this. You want to be in a trade for long? Trust the process. That's over 352 pips, right? Over a period of some months. Just hold any trade. One click, trust the process, and let it trade run. Or you could trail your stop loss. Up to you. But the point is, this is going to help you in terms of that panic mode where you want to check to see if you're in the red zone, or you want to check to see if you're in the blue zone, right? Because I used to get in that panic mode a lot. But doing this, it kind of takes off the little stress off your shoulders, having to look at your phone ever so often. Cool. Another thing you could do, right, for your exit point is when you see this third, let me see if I get it. Right. You see below here, right? I didn't think I shared this with the last session, but you see how that third period moving average is crossing over that 9 period moving average? That's also an indication that the market wants to move in the opposite direction and is getting ready to move to the opposite side. That can also give you an area to say, well, hey, here's what's going on. I could put my stop loss right here, buddy. If the market does decide to go up, it's going to hit my stop loss here. I'll be out the trade. Cool. So that is one to put in the bag, right? That is something to take note of in terms of your exit areas. You could do a trailing stop loss. You can let the trade run, or you could wait for that third period moving average to cross that 9 period moving average, right? To exit. Use that as an exit, an indication to exit. Cool. Let's look somewhere else now. And let's look at another area.
Though, just before you go ahead,
Yeah,
that the third period and the ninth period, that's the yellow and the blue line, right?
correct. The yellow is the third period, and the 9 period is the blue period for those who just jump
Okay.
on. Right. And the 50 period is going to be the black line. Cool. So let's look at what is not a good place to enter a sell. Let's look at just right here. This area right here. Now I used to get confused in the beginning. This area right here, I used to get confused and started to say, well, okay, this red bar, it closed below the 50, right? This red bar closed below the 50. And I have to enter here, boy. I might enter here and get you, right? Might enter here and I get you. Or even look at here, right? Look at here. You see this happening. You're not looking at here. Here's a good indication of our entry. I will explain the buy just now. But what is not what it is you want to see? I'm gonna show you what it is you want to see. You want to see this blue, which is the 9 period. You want to see it above the 50 period and it's pointing down, right? See how the 9 and the third period is pointing down? You want to see that, right? And you want to see the 50 period looking like it's moving at a horizontal angle, right? It's moving horizontal to cross. Once you get that cross, that's a confirmation. Cool. So this 9 period must be above the 50 period moving average. Must be above and pointing down along with the third period. So here's our next area of entry over here. Look at this long Heikin Ashi candlestick, right? It crossed the 50 period and it closed below it. It closed below it. As one confirmation. The 9 period and the third period is actually pointing down also. The 50 period moving average is crossing both the 9 and the third period. Now, while the market is moving, it may not cross the 9 period as yet. You might see it touch the third period, right? Consider it as a confirmation, right? That's another confirmation there. Then the last thing you want to check to make sure is to line up using your vertical line with your RSI. Like this. All right. And checking to make sure, because there's a red candlestick, so we're looking for a sell. Checking to make sure it's in that overbought area. Right? Remember again, I considered anything below my 40 line as overbought, anything above my 60 line as oversold. So if it's in the overbought position or overbought area, I'm looking for that sell. I'm looking for that sell. Boom. That's the sell. I could either move my place a buy stop below here or do a market execution. As I said before, my stop loss goes to the last area of resistance in the sell. If it's a sell, I'm looking for the last area of resistance and I put my stop loss there. I could calculate it, see how much I'm risking. I know my account size, so I know it could handle it. Right? Normally 1 to 200 I look at. Right? So that area for my stop loss is 150 pips. 150 pips stop loss. Cool. So we have my entry. Let's say I enter the market here. Look, look from the entry, holding the trade, trusting the process. Right? You got a nice little pullback here. That is pullback here. A pullback of 61 pips. You don't get knocked out your trade long time with a 20, 30 pip stop loss. All right. So you don't out the trade. But watch. Market drop 166 pip. The power is one click, you know. You click once or you click twice, you don't have to watch your phone, get so worried about if the market going and move down, right? Just trust the process. Trust the process. 168 pips. Exit area. Look at the exit area. Right? You're seeing that yellow moving average crossing the 9 period moving average right there and going to the upside, pushing to the upside. And again, that green candlestick also. So that is an indication that the market wants to go in the opposite direction. Perfect area to move your stop loss to. Anyway, here, or if it is you were doing a trailing stop loss. If you so desire. Right? So that's it for the sell. I want to give you an example of a buy right now. Probably using the same. Okay. All right, cool. Okay, use here. So for a buy, we look for the opposite, right? Here's the opposite. We're looking for a green candlestick now, right? And that green candlestick must cross again the 50 period moving average, and it must close above the 50 period moving average. That's your first confirmation. Second confirmation is the 50 period moving average is crossing either the third period or the 9 period moving average. That's your second confirmation. Cool. You could add this other confirmation where the ninth and the third period moving average is actually pointing to the upside, indicating a uptrend, a flow to the upside. Lastly, you want to use your your vertical tool, line it up with that Heikin Ashi candlestick, line it up on the RSI, and you want to look for where the market landed. All right. As you can see, it's above the 60 area zone. It's above the 60 area zone. So guess what? This is an area I consider as oversold. We all know in an oversold market, we are looking for a buy. Great. I am getting ready to enter into this trade. A buy stop, or you could do a buy stop or a market execution. A buy stop or a market execution. Now look at this. Look at what's going on here. From the entry, potential gains. We're looking at about 200 pips. 200 pips, right? From the entry. And I know if you guys realize, right? From the entry, you know, to me, it is not that much drawback before it continue going to the upside. To me, right? 60 pip drawback is not really, you know, or that small pullback or 60 pip or 50 pip is not that much to me, right? Because I custom like with 100 pip stop loss and those stuff. Given the trend or the trade itself, breathing room. Okay, so 200 pips offer this buy entry over, let's say, 1, 2, 3, 4, 5 days, right? One click, 5 days, you hold your trade. Cool. Now watch. I would have put my stop loss in a buy, my last area of support. So in the buy, I'm not looking for my last area of resistance because you can never, you can't put a buy entry here, and yeah, we all know where stop loss go, guys. We all know where stop loss go, right? In a buy, your stop loss goes below your entry. In a sell, stop loss go above your entry. So what I do, I place my stop loss at the last area of support, right? The last major area of support. Realize and notice that I'm still in the Heikin Ashi candlestick chart. I haven't switched to no candlestick as yet to do anything. Just reading off the Heikin Ashi. Cool. As I said before, you can do a trailing stop loss or do like what I do most of the time. 20 to 30 pips in profit. You twin trade, you close one trade off, and you move your stop loss 2 to 5 pips, right? In a buy above the entry. 2 to 5 pips. Guess what? This market would have came back here and would have hit your 5 pip or your 2 pip stop profit, as Christopher Derrick does say, and it would have been exited out the trade. It would have been exited out the trade. To me, that is smart trading. You want to have more wins than losses. That is my aim. More wins than losses. And always safeguard your profit. Or you could leave the trade, let the trade run. You could still close off one of the trade, or you could just leave the trade, let the trade run until you reach, like, let's say 100 pips or 60 plus pips. Right, 60 plus pips, and you wanna move it, move your stop loss. It's up to you. It's up to you to leave it or do a trailing stop. Now, if you're leaving it, yeah, remember for that exit area, you wanna look out for that third period moving average crossing the 9 period. If you're leaving the trend, the trade as is, and not doing a trailing stop, what the area you're looking for to exit is when you see that third period moving average crossing the 9 period. Get ready to exit. Look at right here. Look at where it crossed. Right here. Get ready to exit the trade. Right? That is if you're leaving it as is. You realize when that cross, the market start to move to the downside. And you got another point of entry over here, right? Another point of entry here. First. And all you're doing, right? Once you have the basics down, support and resistance, you're good to go. Knowing where to put your stop loss, support and resistance, knowing where to put your stop loss, um, understanding how much you're willing to risk based on your account size, right? I recommend you go through risk management again, understand it fully, right? If it is you want to try my style of in terms of where I put my stop loss. Right. So that's a buy example right there. Can't get it any better than that. So are there any questions? I want to do one more chat and close off.
Good night.
Good night.
Um, how how you got those period lines on the chart?
Okay, cool. So to get your period lines on each chart, right? You're moving averages. What you want to do, there's two things I can show you. I'm going to show you my way and I can show you the next way. So you go to this bar to the top here. Let me just move this. All right. You're going to see compare and indicator. You go to indicators and strategies.
Indicators and strategies.
Yeah. It's going to mark indicator and
Uh-huh.
you're going to see this nice little wave pattern here next to indicators. When you
Right.
select that, you can either do two things. You could either type moving average, right?
Right.
Exponential. I recommend moving average exponential, right? And select
Okay.
that. And it's going to come up on your screen. Let me hide this one. Right. So to change the settings, you're going to see it come up here. You're going to see EMA 9 close. So what you want to do, you want to go to, you're going to see show format, apply indicator on EMA, and you're going to see delete. You want to go to format and select format, and you want to change this. You want to leave it at 9 period, and you're going to want to thicken those lines so it could be more visual, and try to use bright colors so you can see.
Okay.
Right? Try to use some bright colors so you could see. And then you press OK. Now to get the 50 and the third period, you want to do the same exact thing. You go to indicators again, right? Moving average. You're going to see moving average exponential. Select it. Right? You're going to tell me no thanks, I need to upgrade. Right? So cool.
Right.
If you don't have the upgraded trading view, which is the premium package, I believe, you're only limited to a certain amount of indicators onto your trading view account. So
Okay.
the trick I the trick I did so I could have more indicators, a little more indicator on my screen, I search for an indicator called the guppy, right?
Copy.
Guppy. When you type guppy in the search bar, you're gonna see this first one come up. It has 190 likes, right? It's pretty much
Hmm.
famous. And you're gonna see these digits here. You're gonna see guppy MMA 3, 5, 8, 10, 12, all the way up to 60. This is the one you want to select.
All right.
And when you select that, let's let me do it up again. All right, so select here. It's actually loading right now, compiling. Okay, I will do the setup. It's not coming up right now. It's compiling. Not applicable.
Hmm.
Okay.
Okay.
Anyway, so if it does come up, right, what you want to do is go into format, right? You're gonna see all these different lines. There's a lot of different moving averages off of this just this one indicator. So what I do, I leave the tree, I unmark the rest, I leave the 8, unmark the rest. So I leave 3 and 8, and I leave in 50. Right? I'm leaving 50. So I have 3, 8, and 50. What I do, I take on my lines, right? I take on my lines and I change the color, right? Make sure all these colors are bold. And I change these colors into bright colors. And next, what I'm going to do is go into input and I'm going to change 8 to 9. I'm changing 8 length to 9. And I'm going to select OK. Ah,
Change.
okay. Right. So this is how your indicator is going to look when you select it. This is how it's going to look at first. Right?
Okay.
It's going to look like this. You go to format, you remove, remember you're leaving 3, you're leaving 8, and you're leaving 50. You're going to remove all the rest. And you're going to change your settings. Make sure your lines are thickened and it's in colors that you can see. and you're going to change the length on 8 to 9 and then select OK. Right? And your chart's supposed to look like this. All right? 3
Alright.
moving averages up. Good to go. Understand, bro?
The length, we are changing the length again?
All right. So for the length, right, you go into format. They may start you up on style. You see to the top in max input, style, and source code. All right. You want to go into inputs, and you're going to see length, and you're going to look for 8, length 8. It's going to be like this. You're going to see length and 8, and you want to change 8 into 9. You're going to see 2 up arrows, and up or down. When you select down, it goes down 7, 6.
Oh, okay, okay.
Yeah. Right. You leave it at 9. Right. When you're done, you press or select OK. I don't know what's up with my chart tonight. Even trouble. Be even bad. Cool. Any other questions?
No, that's what I wanted to know. Thanks.
All right, cool. Anyone else? Going once, going twice. Cool. Is Miranda still on the call? Hi, Miranda. All right, cool. So I don't know what's up with my computer tonight. Just plans to give me trouble. Yeah. All right, guys. So just remember, trust the process. Go through your ML Academy. Ensure that you have the basics down. Basics 1 to 4. Right? Don't take the education for granted. Don't take the education for granted. All right? Understand trends, understand stop loss, risk management, support and resistance, trend lines, right? Pullbacks. Get the experience and the knowledge, right? And patience, patience, patience. When I first started, the mindset that I have now compared to when I first started, well, is like totally different. I was actually treating this business opportunity like gambling. And I just wanted to become a millionaire overnight. I got the reality check early in the game after some trial and errors and some pain in the pocket. So, yeah, learn from each other's mistakes, guys. Ask questions. We have groups. Feel free to ask questions in the groups. Right? We have a lot of individuals in the group that have the experience and could help you to cope with whatever it is you're probably going through in terms of trading wise. Right? I recommend if anyone who wants to try this for the first time, try it on your demo account, please. Right? Try it on a demo account, see how it works, get the feel, right? You can probably add some new confirmations to your liking also. Whether you want to use Fibonacci, you want to use trend lines, you want to add in some more support and resistance, whatever, to make it your own, right? That is why your trading plan is important, guys. Create a trading plan, right? If you don't create a trading plan and you're just jumping on and just identifying trends and just looking at the market and pressing buy and sell without doing any risk management or calculations or knowing why you enter into a trade, you're pretty much gambling, guys, if no one ever told you. So that is basically it for tonight. Thanks for everyone being on the call. Miranda, can you please unmute yourself? Sis, can you please unmute yourself? Is anyone hearing me? Just like give me an indication or type in the chat box if you guys are hearing me. No, I'm not hearing you, Miranda. Alright, so Miranda is having some technical difficulty also, right? So guys, that'll just be it for tonight. I wanna do, yeah, Miranda, cool. Right? I wanna do a more detailed session in the future. Right? I wanna do a more detailed session in the future. It's just time, right? Miranda asked me this week, I think it was like Wednesday, if I could do another session on the strategy tonight. And well, she actually wanted me to do it Saturday, which is tomorrow, but because of work, right? I am in the Trinidad and Tobago Defense Force, so I had to be kind of flexible when it comes to time, right? Always on call. So please bear with me, right, in terms of timing. But I really want to do a more detailed session in the future. So I'll keep you guys posted. But other than that, that's it for tonight. Thank you guys for being on the call. I hope you guys saw value or saw something new that you could probably apply uh, or utilize or look at the market from a different perspective. Right? So good night. I'm having some service problems. So too is Miranda. So you guys continue to have a blessed night. Friday night. Enjoy your weekend. I'm out.
service extremely bad. I was hearing you, but you wasn't hearing me. I don't know what went wrong. The service kept going and come. But Malika was asking a question. I was telling you that, but I realized you didn't hear me. Um, I don't know if you can speak to she concerning that. She had put it in the chat. But thank you very much again for the call. Team Cal is really appreciating that strategy and making a lot of money on that strategy. So thank you once again, and we'll chat